Thank you for joining the live stream. Please share. Call your friends, share with your friends to come and gain this great insight into how to take charge of your finances. Share. Call your friends, call your neighbors, your children, your husband. No one is left behind. No one should be left behind in this crusade. As long as you are 18 years and above, you can be part of faith. You can be part of the abundance life. God of abundance is calling us to abundance today. Leave your comments in the YouTube. Leave all comments on YouTube, please. Thank you for joining. Thank you. Share. Let people come and if you have not subscribed to my YouTube channel and you're here, please subscribe today and hit the notification bell so that you can get notified when next we have, a video uploaded or we're having a great event like this again. We have 3 more minutes. I acknowledge you wherever you're watching from. You can leave a comment where you're watching from, where you're joining from. If you can hear me, just acknowledge it. In 3 minutes, we're starting. We just want more people. Come on now, unity together, listen. I am living in abundant mercy. Hey, living in abundant favor. I am living in abundant power. I'm living in abundant life. I am living in abundant blessing. Hey, living in abundant victory. I am living in abundant, living in abundant, living in abundant life. Okay, welcome everybody who has joined. Thank you so much for taking out the time to join this live, the first of its kind. Thank you.
Like the topic of Abana says, creating generational wealth. Um, because everybody, I guess, would like to leave for their children some kind of legacy. So that's why we're here today. And I have with me my wonderful, wonderful mentor, Miss Ajoke Omojesu. Miss Ajoke is an attorney and a life and health insurance producer. She has helped so many families in this America to get their lives and their finances in perspective. That's why I chose to bring her so that she can give us an insight. When I met her, I can tell you that even me, my finances were like somehow, but she encouraged me, and working with her has been great. So, since you're here this afternoon, I want you to have an open mind, and listen to Miss Ajoke Omojesu, and I can tell you that your life cannot remain the same. Thank you very much, Miss Ajoke, for being here today. I appreciate you for taking the time, out of your busy schedule. I know you are not even in town right now, you're somewhere, and yet you took time out to come here and educate people. Thank you so much. So the floor is yours. Thank you.
Thank you, and thank you for having me here and for that amazing introduction. What you're doing is amazing. And Martin Folakemi, I wanted to know it's not what you're doing is amazing, trying to put yourself out there and educate people. So I appreciate you for that. And thanks for having me here. It's a privilege and my pleasure. Yes. So, welcome to the viewers. If you're on here today, the viewers, I'm glad that you made time to come here. I promise you'll be worth your time. If you've got some loved ones that you would like for them to listen in, please call them in. So, I was invited here today by Martin Folakemi Praise. She told me that she would like for me to come here and share with people about how to make sure that while they're well and alive, all of the everything wealth for them. I'm talking their assets, even liabilities. Like people who have homes in America, but you still owe like 20 years to the bank. It's a liability, it's not yet an asset. Even income replacement strategies and what we can do. How can we get to that wealthy place? And I'm humbled to be here to be able to share that. Again, of course, my background is that I'm a lawyer. We have a law practice in Washington, D.C., where we focus on immigration law and estate planning. Estate planning is all about legacy building, helping people with, everything legacy, really, whether be probate or just writing a will and other things in between. And that's when we realize that, wait a minute, what's going on in our community? If you get 20 people who come for estate planning, write a will, create a trust, blah, blah, do you know that 85% of them, what they consider an asset to leave behind, is still a liability? The business still owes a ton of money. It's not an asset. They still owe so much on the home and stuff like that. So we realize that there is a need, an urgent need for education in this space. So I'm just going to go into it. So, when it comes to financial wellness, one art doesn't fit all. Everybody's in a different stage in life. Some people are just beginning the journey, just getting out of college, just starting to just build those building blocks for their financial portfolio. Some people are already done. They're already in their 60s, ready to retire, and they're thinking, what next? Some are in between. So one heart doesn't fit all. What's suitable for a 70-year-old female is different from what's suitable for a 30-year female in terms of that financial portfolio. And of course, all based on what the individual wants. What are they trying to achieve? What is financial success to them? So it's meeting the people where they really are and to fulfill the values that they want. All right, so very briefly, we don't have much time. Everybody, regardless of what stage in life we have to make sure that we protect ourselves, we protect our wealth, and we protect our health. So I'm going to leave health out of it today. But you know what, though? Health is wealth. Only people who are well and able are able to go and use their creativity to bring in some income and begin to start this building block of creating wealth, you know. So we're going to really just look at what does that look like in America today. Okay, here we go. So we all come into this country. I'm probably Nigerian. I'm not from here. I don't know where the listeners are from, but whether you're from here or whether you came as an immigrant to this country, one thing holds true for everybody. We go to school and do all that so that it's all in hope of being able to build a good financial health to do life. Because without money, there's a problem, right? And we get started with this race, and people get stuck in several different ways. Number one, it's the rat race. Most people get out of college already, they have a debt on top of their head. They need to figure out how to pay off the debt, get into the work circle and begin to build wealth for themselves. And I can tell you right away, for a majority of them, that loan, that student debt is an handicap right off the back. It puts them at a strong disadvantage, the ability to move on. So how do you even deal with that? What can you do to make sure that you can get the education you desire and yet you're not carrying debt over the top of your head? Number two, many people go into the work first and they begin to plan for the future as everybody should. When I retire, what will I retire on? America is amazing. There's 401k IRA, SEP IRA, and then there's cryptocurrencies, the stock market is there. People invest in real estate. There are all sorts of things that people do. And that is their retirement strategy for themselves. And that's great. They're already doing those things, right? But how come if you Google right now and you search in America, how is retirement income savings for people? You find out that 50% of Americans have less than 20,000 saved up for retirement. The question is, what can anybody do with 20,000 retirement? By the way, statistics are going up. People are living longer in America now. Men are expected to live up to age 75. When I say men are, that is 80% of men, and 89% are expected to live above age 90. And of course, they have a higher mortality rate than women. So people are living longer. So people are beginning to spend equal amounts of time in retirement as in their working years, right? And then what about while you're alive and you're working and you're well and you're going in and out of work? When life happens, what do? Many people that you may know had a stroke. We know when stroke happens, what happens? Partial paralysis, complete paralysis, then they go into rehab. Some people will never recover fully. Some will recover as, partially disabled for the rest of their life. Some will recover fully. But for all these categories, average time of recovery in America for that situation is actually 3 years. Did you know that? 3 years. Question: can you live without your income for 3 years? How many people do you know who are able to live without an income for 3 years? In fact, let's make it 6 months. How many do you know? Most people, the truth of America in America is that most people they live from paycheck to paycheck, and that's a problem. So there's several tools that you can engage for all those things. Today, in the interest of time, I'm going to talk about just one thing. By the way, you can do indexed annuities for retirement, which serves you better than if you go into 401k and IRAs. Why is that so? Many people do not realize or they don't pay attention. There are two kinds of 401ks and all that, because even the government understands that it's not fair for people to work so hard that you put your money in 401ks in the stock market. It's up and down based on the performance of the stock market. And then when you're ready to retire and you take your money, your capital gains, you're taxed at the then current tax rate, which most of the time people are so upset. Is it possible that throughout your employment history, the market will never fall? I don't know about that. We know the nature of the stock market is it goes up and it goes down. So it's gambling. Putting your money in the traditional 401k, traditional IRA for your retirement plan, to me, is just gambling, right? What are the other alternatives? Many people do not know. I'm going to talk about them. Also, annuities are out there. Many people go into regular annuities. They're not indexed. The same risk as the 401k and IRAs, up and down the stock market. And then when you're ready to retire, you pay your taxes. But there's indexed annuity, where you're guaranteed zero flow, you can never lose money. So what can we do? Today I'm just going to talk about a tool called the Living Life Defender. Many immigrants do not like the word insurance. When they hear insurance, like, what? You want to kill me? You want to use me for money or whatever? Today, hopefully, this will open up your mind so much. What a disservice that the people do not understand what insurance means today in America. As we all know, in America today, the biggest challenge that you have competing with your wealth, ability to create wealth, is the tax man. The more you make, the more they go into. The more you make, the more they go into it. And in America, there's no way you're going to earn capital gains, which is growth on your money. When you want to invest and you have growth on your money, you must pay taxes or you go to jail. There are only two legal ways that you can grow wealth, multiply your money, and you're not required by law to pay taxes. Number one, if you're in a Roth products by the government, Roth 401k or Roth IRA or the Roth products, it means that they will not tax you. However, they're very highly regulated. Every year, they set a new cap. If you earn beyond this point, you cannot participate. If you want to save more than this amount, you are not eligible. I know last year was 17,000, and the income for a single person was $147,000. If you make more than that and you want to use this, sorry, you're out of luck. The second way in America that you can create wealth and not be taxed is in your life insurance policy. The IRS tax code says any money built up in the life insurance policy cannot be taxed. By the way, additionally, in America, a life insurance policy is not considered an asset. It's not considered an investment. It is not subject for any kind of garnishment, even by the IRS. This is huge, and everybody needs to know that. That's huge. Now, the super wealthy people who understands this, they pay the best tax attorneys and accountants to figure out how to do money, taxes, to minimize it. And you know that the superpowers lobby in the government, they were finally able to lobby, and they went to go and embed one of the best wealth creation tools in America today under the life insurance umbrella. What does that mean? That means that all that money they're growing here can never be taxed. It's invisible to the IRS and can never be the subject of any kind of garnishment, alimony, child support. No, nothing can ever come in. Nobody can say you have a life insurance. I want to put a lien on you because of your insurance. No. Everything else that you own, they can place a lien on your house, whatever, your income can be garnished. Yeah. Not everything in your life insurance. This one single fact has made life insurance one of the biggest wealth creation tools in America today. Banks invest in the life insurance cash value. Banks that you take your money to, we go to, they invest in. Why? No taxes, no taxes, and access to strategies in the marketplace that are high. One of the best ways to go into the stock market these days is to go into the US space setter market, the US space setter, because there's a cap-free market and it's indexed, meaning that when they lose money, you stay flat, you don't lose money. But when they make money, you make everything they make as well. If you go and do that with a third party or on your own, whatever you make, you're going to pay. You're going to pay your taxes when you want to collect. That's an example. But if it's inside your life insurance policy, you don't pay. What other strategies can you attach and engage within your life insurance policy? Several. Actually, between all of these insurance companies in America, all of them, S&P 500, cap focus, S&P 500, point-to-point focus, the Swiss market, yes, the ginseng market, the US based setter, and on and on and on and on. It is a beautiful thing. So if you own this tool called the Living Life Defender, I took the time to tell you the genesis of the reason why today you can put money in an insurance policy to grow money for you and you're not taxed. Now let's talk about it holistically. This tool called the Living Life by Design, which is a form of indexed universal life insurance, is an amazing tool. Anyone who qualifies to own one and can have one have five benefits that are very, 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 very integral to your financial peace and success eventually. So our education, our counsel is that there should be nobody who doesn't own one, because it doesn't, even if you earn $10 an hour, you can design what works for you and own one of these tools. Nobody should leave themselves to chance. Why? Number one benefit of this is what we call the living life benefits. Hypothetically, if you own an index investor life defender, because you own it, let's say you have $1 million. Anyway, before you set it up, you see an agent who knows what they're doing, and they factor in all your liabilities. So, first case scenario, it's income replacement. What does that mean? Everybody must have an income replacement strategy because life happens. In America today, 95% of disabilities caused by diseases, not even injury or accidents. I thought it was accidents, diseases. Life happens. It can happen to anybody, young or old. I was just sharing about a 10-month-old that was diagnosed with bone cancer, and they fought it for 3 years. She eventually passed. How sad. As they were losing her and grieving her, they were losing all the finance, all the money they lost. They spent everything they had to fight for that girl's life. Anyone who wants this policy, living life benefit, what does that mean? Let's say you own $1 million living life defender, for example. And let's say, God forbid that happens, but you experience Alzheimer's disease, which, by the way, in America right now, 1 out of every 9 65-year-olds suffers some form of dementia or the other, right? Critical injury, coma, second-degree burn, a severe, tear of tendon, whatever injury, chronic illness, critical illness, terminal illness with diagnostics of likely death up to 24 months. Anyone who owns, let's say you're on $1 million and you're going through any of those things, you can choose to accelerate that $1 million and use it. So mind, in America today, 60% of bankruptcy cases and 50% plus of foreclosures are due to health impairment. Very important. Everybody's working hard, I want to buy my house, I want to do that. If health is impaired in any way that I've just mentioned, any of those ways, right? How are you going to pay the bills? How are you going to pay mortgage, car notes, school fees, eat and do life? But if you have this tool in place, whatever debt benefit you have, you can accelerate in bulk and apply as you want. I'm not talking about these companies that send money to your insurance. No, you are cut a check of your own naming. If you get it all, you no longer have the insurance. If you accelerate $500,000 out of $1 million, you still have your $500,000 in force. Maybe you still owe the bank $300,000. Instead of the headache of looking for money, just pay. You actually convert your liability into an asset. Not only do you protect it, you convert it with money that is not your own money. This insurance coverage is not your money. Maybe you're paying premium of 100 or whatever you're paying. It's not your car. It's like car insurance. That's the concept of it, right? This is phenomenal. Not only can you use it to pay off liabilities and convert them to assets, and now you own them. Now you can put in your will, you own it, right? But also you can replace income. Maybe you earn 150 a year, but here you are. You can't do anything. And the doctor said you're going to be in rehabilitation for another 6 months. What are you going to do? Even if you've owned your phone company, you've owned service with them for 20 years, if you don't pay 2-3 months, you will know. They will cut it off. Your light, your water, we know how those things work. You can just say, yeah, replace my income this year. And then you can focus on wellness because you have financial peace. And you stand a better chance to beat whatever disease it is. Because my friends that are doctors tell me that when money is not a problem and people have financial peace, they stand a better chance to fight, because when real issues happen, they notice that the stress kills them before even the disease a lot of the time. So that's amazing. So it's asset protection and conversion, liability protection, conversion, and income replacement. Number 2, wealth creation. How many people do you know, just a general question out there, that can leave an inheritance of $1 million, $500,000, 200,000, and it's big money to their generation? The scripture talks about a good man leaves an inheritance for children. God is actually saying you're good if you can actually take care of not just your next, but the next one too. How easy is it? Well, it could be very easy. Whatever coverage you own in insurance, there's a generational wealth creation of value to it. We all know already. At the end of life, your name beneficiary will get 100% of this money tax free. That's amazing. People think it's not a good thing and they talk about it like, who wants to die? But it's a good thing. According to God, it's a good thing. A good man leaves an inheritance. That would be a good one to leave. Number 3, we talked about the retirement. In this tool, you can design your own retirement plan guaranteed for a lifetime because this living life defender would stay with the owner until their age 120. Question: how many people live beyond age 120? I don't know any. I know a few that made 100, 101. That's it. And this too stays and pays every single year to the end of life, tax free. Guess what? Let's say you've built, for example, $200,000 in your IUL cash value, and what you have is $1 million protection. At your age of choice for retirement, the million combined with your own 200, you get all that money as a free reign. So, as opposed to paying tax after losing back and forth in 401k and all those things, you never lose over here, you don't pay taxes, nothing. You actually get your death benefit. Talking about working smart, it's time to wake up and begin to work smart. I look at the Jews, I look at the Chinese, I look at the Koreans, the Vietnamese, everybody, they're working very smart. But in our community, people just work hard, 3 jobs, 16-hour shift. And by the time they're a little older, the back is gone, there's carpal tunnel, all sorts of chronic illnesses, critical illnesses. They can't really make any much money and they are left unprotected. So nothing can come to their aid. So people work all those years to retire on less than a third of what they were earning while they were working. That was not already enough with those diseases and all that. So they end up living in old age, just harassing their children, depending on them for everything, or being a liability on the government. This is not a choice of life. This is not a way that anybody should elect. Another thing is the estate planning purposes. Smart people, if you open a Jewish community, when they have their children, on 14 days old, the gifts of the grandparents and the parents is $1 million policy. They call them the $1 million baby. They get it. That $1 million policy that you open for your 14-day-old baby, that will be where you take money for college from. And you might do. They do not contribute into that thing anymore after age 17. But our own people of color, at best, they go and do 529, college education fund with the government. I'm not saying it's bad, but let's take a look at it. Let's compare. 529, number 1, the cost of insurance is about 4% already on that. Number 2, not all colleges accept it. So if your child wants to go to a college that doesn't accept or participate in it, you will withdraw the money yourself and pay. Once you do that, you're going to pay taxes. You only don't pay when it goes straight as wire from them to the school. Number 3, what if your child gets a full ride to college? What if you get a full ride to college and you don't need a 529? Answer, and you collect your money, you pay taxes. Number 4, if you open a 529, it's for college. Once you take it and use it for college, what other benefit does your child get from it or your grandchildren? 0, nothing. How about if you contribute that same amount into an IUL open for that child and fund it only for 17 years, same amount of time, same amount of money? What will you get back? You get the money for college. Number 2, FAFSA, I forgot to say, when you fill FAFSA for college, which every child going to college must do in America, the social security number of your child exposes what you have in 529. And they'll say to you, oh, you're good. Let's help those who don't have money because you're saving. You penalize yourself and your child. And you disqualify them for being able to qualify for FAFSA at all or to get the minimum amount. Why? Why do that? When if the money's in the IUL, they can't see it. It's not an asset. You're not meant to declare it. It's life insurance. So that money is there for college. You stop contributing at age 17. They use money, go to college. Guess what you've done? The money you've put goes autopilot, keeps on growing for them. They could graduate, they want to buy a house, buy a car, they can get money from the cash value. At retirement, they want to use that as supplemental retirement based on how you funded it for them. There's money that they can receive for the rest of their lives. When their own life is done, then you're leaving that million plus all the built up remaining cash value to your next generation. How smart. If that child, God forbid, has any kind of health issues along the way, no worries. Your cash is intact. The protective portion, the coverage, million, comes to them to help them. So as you can tell, this is amazing. Also for estate planning, when people pass, they're going to evaluate the value of your estate and you're going to pay taxes once you exceed the allotted amount that is tax-free. That's why the super wealthy people are so smart. Somebody buying $20 million policy, they don't need insurance. They just want that money to pass on to the next generation tax-free, tax-free, tax-free. They also don't want to expose their assets to lawsuits. In case you do not know, everything you own is subject to a garnishment, a lien, lawsuit, lien, if it's in your name. But a life insurance, nobody can make it any subject for any kind of lien holding or anything like that. That's why people go and do irrevocable trusts in their lifetime. To let the asset go on in estate planning, let the asset go to people they want to give. So that, if anything should happen to them, those properties are secure because they no longer consider the owners. But they lose control and people don't like that. What if I want to change my mind to not give this child a house anymore? Is it irrevocable? It's irrevocable, So that's it, right? So those are the important things, a few things that people need to do. So in short, in summary, I know that it may be a question of what is she talking about? Money in insurance. What is she talking about? This is the thing. In this new insurances, there's cost to insurance. You pay health insurance cost, that. You even pay copay and deductible. You pay car insurance cost. Insurance has a cost to it. In the IUL, it's designed such that beyond your costs, whatever you put in your policy in excess of the cost goes into the market strategy of your choice to grow for you. Yes, that's how you grow the cash. So you have to be an intentional participant. If you don't fund your policy much, don't expect much. But what we're educating people, the money you already put into cryptocurrency, into IRAs, into traditional 401k, traditional IRAs, right? 43Bs, 529. Consider putting it here. Why? Because you get so much more value out of what you're putting. Okay? So many stories that I can share with you. In this little while that I've been doing this, for example, I have a Vietnamese client who had a sprain. When she called and said she had a sprain, like, a sprain, why are you calling? How does that qualify? But she called again and said, they put me in rehabilitation. I have to be doing physio. My physiotherapy said it's going to take about 3 months. What am I going to do? I can't make money. So just, for the sake of it, we filed. She got the accelerated money for critical injury rider. She got paid. Even I was shocked. I didn't think that would qualify, but she got it. We have a client who is a doctor. She contacted us, she wanted to buy her own medical practice. A building she has a practice already, but she wanted to own the building. So she needed money for this transaction. And she called, very angry. She had money in IRA and crypto. She said she lost about $75,000. And she was wondering if she had money in this policy. She was very happy to find that she had money. And she took what she needed out of it to use for our deposits, the down payment for closing on our home. We have another client who had run into the IRS. We had no idea. We just got a call earlier on this year, making inquiries about opening a small policy. And what additional policy? Oh no, thinking I knew what had happened, and they shared the story of what had happened. They were picked up in 2021. They were locked up, audited, and all that. He said he lost his house, they took his house, they took his business, they took his bank account. So he thought that they also took the insurance policy. To his delight, which pleased our own heart, they didn't. And that day, he could withdraw. He still had 29,000 plus in that policy that he hadn't funded since 2021. So those are just a few of men. What about this client, 21-year-old? The parent just got policy, just to have policies as estate planning strategy to plan the estate. That was a gift to the child. It turned out that the girl, when she turned 21, I think she was a sophomore at that year, she was diagnosed with cancer. With cancer. I mean, the best part of the story is that she actually beat the cancer. She didn't pass on, but they chose to accelerate that money. It was the best day ever when we delivered the check, $920,000 for that girl. You know, so in the interest of time, that's it. Enough stories shared. So in summary, this I hope has opened up somebody's mind to be curious. By the way, life insurance is not the only way that you can grow money and grow wealth. You can go into real estate. You can buy stocks and bonds. You can do cryptocurrencies. You can do all those things. Our counsel to everybody listening is that there are smarter ways and there's a time for everything. The volatile market, in our humble opinion, is not for someone who's just starting out. Because if you lose the money you put there, that's reckless. You have to start all over again. But it's for those who have already built a solid financial, portfolio foundation. They know that they're already good. Oh, I'm good for retirement already. I did this and that. I think I'm fine. I want to try the stock market. I see people making so much money in the stock market. Let me try my luck. That's fine. Because if they lose that money, they're not to ground zero. They have something they can fall back on. That's all we're saying. We realize that some people know how to play the game and somehow they beat the downward trend. But even Warren Buffett just lost so much money in 2022, the king of the stock market himself. So, nobody is God to know what the market will be doing tomorrow. That's why we're like, when you're starting out, engage the very smart tool. That's a one-stop shop for a lot of things. Instead of contributing money here, this one is for disability insurance. This one is my children college education fund. This one is to take care of my consolidated. One tool that gives you your 5 solid financial pillars to begin to build on, and why you have a lot of peace of mind while you're at it. That's it. Obviously, not everybody can qualify and it's not suitable for everybody. There may be somebody listening right now, you're already like 65 years old. Insurance is not suitable for you. Cost of insurance is driven by age and health. Most 65-year-olds already have some health impairment that may or may not, but may disqualify them. And the cost at that age is so expensive. So for such people, an annuity, index annuity, will be a much better bet. You can roll over your 401k so you can stop losing money up and down at least. At least you will still pay taxes in an annuity. But it's indexed, so you don't lose money anymore. So that may be more suitable for that kind of person. Or maybe your own need is that your parent are living with you, they're older. You want to make sure that at the end of their life you have money. Do the last rights. The last rights instruments you can put in place. There's no qualification necessary for this one, no underwriting. Just apply for it, and when that time comes, you engage the tool. Yeah, there's so many ways to get to the wealthy place. You can have a lot of real estate properties, and if you're good and you fall on good times, no bad tenants, no issues or whatever, people are doing and making money. So there's so many. Life is like we're running a race in this life to our place of destiny, everybody. And as we're running, we engage different horses to run this race. We engage different tools, different vehicles, and there's several of them. This discussion is to shed light and bring to people's consciousness something that people don't pay attention to in the African American community, while all the Asians have, and they're really leveraging it. And that people think it's taboo. That's one of them. While there are also all these other things that we can engage, like the index annuity, like we talked about, last rights, yes, the right kind of candidates can still engage in the stock market. Again, when you're already in a good place and you have a good knowledge of what you want to do, you know that most likely you'll not lose money. You can go try your luck in that gambling market. So today, I hope that somebody has been very, very blessed. And if you have been, spread the news. Tell people to do their own research. And if you have any questions, I'm going to stop now. Our time is fast spent, so you can ask questions. And yes, so
Thank
thank you
you.
for being an audience today, and hope you were blessed by this session. Over to you, Attorney Folakemi.
Wow, 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 wow. Thank you so much, Attorney Ajoke and Omojesu. I really appreciate your time. You have really spoken well, and I hope the audience has been able to gain one or two insight. If you are here, thank you so much for your time as well. I do appreciate you. If you have not subscribed to this channel, kindly subscribe right now. Like, and share. This channel is an informative channel and not one of those entertaining channel. I'm here to give you concrete information that will better your life, that will better your generations. That's what we are here to do. And my sister, I really do appreciate you. I'm very grateful. And maybe we didn't give this enough publication or something, but we're going to do this again. Another topic. I mean, there's so much. It's really, really a very wide topic that we cannot cover even in 1 year. So I will bring you back again when, and then we'll make sure we give enough publicity. Thank you so much. If you have not
My
subscribed, subscribe,
pleasure.
like, and share. Thank you very much. And that's our time here. Thank you.
All right, and I have posted my phone number. If anybody wants to contact me for further information, feel free to.
Yes.
Okay,
Okay. I
and
was
with
going to, I'm still going to put more information there, how to reach us.
okay, well, thanks for having me. Take
Thank
care. Enjoy
you.
the rest of your weekend. Bye.